It's been said that in stock market investing, the trend is your friend. In this video, we're going to use Excel to backtest a simple moving average crossover system and find out if the trend really is our friend. This video was made using Microsoft Excel 2019. I want to state right up front that this video, and in fact this Spreadsheet Geek channel, is about Excel. It's about using Excel and spreadsheets in different ways to do different things. I am not an investment advisor, and I am not giving investment advice, and I am not suggesting anybody execute this trading system with real money. There's plenty of other places you can go on YouTube for that kind of advice. But the 50-200-day moving average crossover system has been discussed widely. I've seen articles written about it, and that's what we're going to model using Excel. I don't know how this is going to turn out, so let's find out. Let's describe the system first. We're going to track the 50 and the 200-day simple moving averages of the S&P 500 index. We'll establish a long position in an S&P 500 index tracking ETF or exchange traded fund whenever the 50-day moving average crosses above the 200-day moving average. This type of crossover has been called the golden cross. We will exit our position and remain in 0% cash whenever the 50-day moving average crosses below the 200-day moving average. This has been referred to as the death cross. Now notice we're going to use the index for our signal to buy or sell, but we're actually going to buy or sell an index tracking ETF. I want to make this as realistic as possible. Keep in mind that all index tracking ETFs have some tracking error, but there's some very good S&P 500 index tracking ETFs with very low tracking error. We will update our moving averages and reevaluate on a weekly basis. We're not going to do it daily. When the 50 gets close to the 200-day simple moving average, you may get a few days in there where it ratchets above and below, and I don't want to be ratcheted in and out over the course of a few days. So we'll try to avoid that by just updating our system weekly. We're going to assume that all dividends paid out by our index tracking ETF are reinvested immediately, that same day, provided we have a long position at that time. This is going to be a slight source of error because in reality, when an ETF pays a dividend, you have to wait from the ex-dividend date a few days or weeks until you actually get to the payment date and receive the cash. This is a small error and we're going to overlook it. We'll assume all trades are commission-free, and that's pretty typical these days. We'll also ignore taxes and assume that all of this trading activity is in a tax-deferred or tax-free account like a Roth IRA. I went into Yahoo Finance and I plotted on a chart a period from late 2019 to early 2020, the S&P 500 index in blue here, and I plotted the 200-day moving average in red and the 50-day moving average in purple just to show what this looks like. This is a death cross when the 50 crosses below the 200, and this is a golden cross over here when the 50 crosses up through the 200. So under this trend following crossover system, we would exit the position in the S&P 500 here, and we would re-enter back here. The theory being that if you do that, you will miss most of the wave down and catch most of the waves up. Although it doesn't look like it in this case, because when you get out, you'll be down, way down here already. So we'll see how that works out. My basic plan of attack for this problem is to have one worksheet that supplies index-related moving average information to another worksheet through a VLOOKUP. So let's create the index and moving average worksheet first. I had to get the dates set up, so I researched the ETFs available a bit, and I found that this Spider S&P 500 ETF Trust, symbol SPY, is actually the oldest S&P 500 index tracking ETF around, and it's been around since January 28th of 1993. So for my index data, I need to back up 200 trading days from January 28th to get my moving averages moving before this can be traded. So let's jump over to the S&P 500 index. Now in Yahoo, that goes by this symbol here. It's got a little caret, GSPC. So we'll go to historical data for the index, pull that up, and that ETF started in January of 93. So I'll just go back to 1992, January. That should be enough till present, and we'll apply that and we'll download it. So that sends me a CSV file with my data in it. Clean that up a little bit. This comes out in chronological order. One thing I'd like to point out on this index data is that the closing price is identical to the adjusted closing price all the way from the beginning right till the very end. So this index data does not reflect any dividend payments. And dividend payments are a significant part of your total return. So that's one more reason why we have to use an ETF to execute the actual trades. When you see the ETF data like this, you'll notice that the adjusted close is adjusted for those dividends. So we'll do a couple housekeeping things. One thing, I'm going to freeze the panes here, and I'm going to rename this sheet Index Simple Moving Averages. Okay, now we said that our ETF started on January 28th, 1993. So I'm just going to scroll down to that date, which is right here. So I need 200 days prior. I'm just looking at my count there in the lower right corner. We'll go up exactly 200 days. You can see it right here. And I'm going to delete everything above that because I don't need that. Okay. So that takes us back to April of 1992. That'll be 200 days prior to the start of our ETF. Now, I don't particularly need these columns, so I'm going to hide them. And I don't need the volume. This trading system is not dependent on volume. And it doesn't really matter in this case whether I use the close or the adjusted close, so they're the same. I'm just going to stick with the adjusted close. So one thing I'm going to do is copy this date column. I'm going to make a second date column over here. I'm going to select all of these dates, and I'm going to reformat these. And you can do a custom format for a date, and DDDD, if you select that, you can convert those to the day of the week. That's a useful thing for us to know because we need to think this through. This VLOOKUP table needs to supply all of the simple moving average crossover information for every day that we need it. Now, we said we were going to do this on a weekly basis. So what day of the week will we update our trading system? I think the logical answer is Friday. Friday would be a convenient day because we don't have to do anything during the work week. We can take care of this trading system update on the weekend. We'll have plenty of time. And I would follow that up with we'll execute our trade, if any, on Monday morning or whatever the next trading day morning is. So to wrap it up, we're going to wait for the market to close every Friday. We're going to check our single moving average crossover. And if a trade is warranted, we're going to enter that with our broker at some point over the weekend. And it will be executed first thing when the market opens on Monday morning or whenever the next trading day is. Given those circumstances, we need to make sure we have close information for every single Friday of the period we're concerned with. And here's the problem. The stock market has been closed on Fridays, so I'm sure there's at least 1 or 2 Fridays in here where there's nothing listed. So we need a contingency to plan for that. So here's my plan. I'm going to make another date column. This date column is going to include all dates, whether they be Saturdays, Sundays, or any other day when the stock market's closed. I'm going to change this temporarily to a general format. I'm going to see that this first date at the top of my list is 33,708. The next day would be 33,709. And I'm going to autofill this down. And I'm going to convert those to dates. So, and let's go ahead and convert that one back to a date as well. Here's an opportunity to go off track. So our new all-inclusive date where there's no missing days, that column goes only down to November 2011, but our data actually goes to August 27th, 2020. So I want to extend this all the way down as far as this is here. So I'm going to change this to a general format. 44070 is how far I need to go. So I need to go down this minus this, that many more rows. So that plus this row number here equals 10,364. So let's go down to row 10,364. There's all our dates. Let's convert those back to short dates. And in this column now, I'm going to do another version of adjusted close. And let's run a VLOOKUP. We're going to look up this date over here. This is the 6th column over here. You can see in the little box. I'm going to fix my references. Autofill it down. And let's just check and make sure that went all the way to the bottom. Yes, it did. So that looks terrific. One thing I need to do is copy this column, paste as values. And I'm going to run a formula that looks at this, and it's not going to like these NAs. So I need a way to get rid of those, and the quickest way to do that is use find and replace. I'm going to find pound NA and replace with nothing. So that'll clear all of those out. So now I have a good solid date column with every single day of the week in it and closing prices. At this point, I think I'm going to get rid of all of these columns because I don't need them anymore. And we need another adjusted close over here to fill in the missing cells. So I think this was the Thursday before Good Friday, and this is Good Friday. That's why the market was closed. So our policy is going to be, if the market's closed on a Friday, we're just going to use the single moving average crossover information from the prior trading day. So let's write a formula to make that happen. And this will be a simple if this number is greater than 0, which they all are, show me that number. And if it's not, repeat whatever's above. Let's fill that all the way down. Let's make sure we got it to the bottom. Yes, we did. And I'm going to, one more time there, I'm going to copy these and paste as values. Let's scroll up. I'm going to get rid of this. And now I just need my 50-day simple moving average and a 200-day simple moving average. So I'm going to scroll down to row 51 and put in the 50-day. That'll be an average of these values. Clean that up a little. And I'm going to go ahead and drag that down to row 201 very quickly. And we'll enter our average of the last 200 days closing price. And we'll clean that one up as well. Let's go ahead and fill these to the bottom. Make sure we got them all. And that looks pretty good. One thing I'd like to do is clean up this error. Ignore it. And for these first couple hundred rows, I don't really care because I'm not going to look at them. I'm just going to hide those. So the first day we've got our 50 and 200 day moving averages both running is October 30th, 92. So we need one more column over here for our decision. And we'll write a formula in here. This will be another if. If the 50-day moving average is above, or I'm going to say equal to include any times when it's equal, the 200-day. If that is satisfied, we're going to say buy, or if we're already in the market, we're going to hold. And if that is not true, we're going to say exit or cash if we're already in cash. That's our decision block. Let's fill that all the way down. How interesting. We've already got one on the screen. This is a crossover point right here where we went from holding to selling. So we now have a VLOOKUP table with everything we need to know. And I'll point out one thing. If you look in our adjusted close column, you'll see every once in a while there's 3 values in a row that are the same. And then it repeats here. Those are Fridays, Saturdays, Sundays. So we've got ourselves covered. If there's ever a case, and I'm sure there are, where the market's closed on a Friday. So let's move on to the next phase, which is to create another worksheet in this workbook where we track our ETF trades. So I'm back on Yahoo Finance. I've gone over to the SPY ETF. I'm going to go hit my historical data and let's just go for the maximum, apply that, download it, open up our worksheet. There it is. And I'm going to go ahead and move this over using move or copy. I'm going to move that into my other workbook, which is called this. Not a very pretty name. And we'll put that at the beginning. So I've got both my worksheets in my same workbook. Let's rename this one Trades, SPY. So let's do a little housekeeping here. I'm going to freeze the panes so my headers stay put. And I'd like to show, just for a minute, something. If you notice the close and the adjusted close column, this is today. And going back in time, these are the same up until a certain point right here. So they're still the same there on June 22nd, but on June 19th, they start to, actually the 18th, they start to diverge. So the difference between this value and the adjusted close is $1.36 and change. If you go back to the Yahoo website, you can change from showing historical prices to showing just dividends. You have to apply it. So sure enough, on June 19th, they've got it. We had it on the 18th. There's $1.36 and change paid out in a dividend. So that's why I use the adjusted close for my trades, because those dividends are important and that's part of the total return. So we've got adjusted closing prices. Unfortunately, for the ETF trading, that's not what we need. Remember, we said we're going to check on Fridays or over the weekend based on the closing prices of Friday, make our decision and put our trade in to be executed at the open on Monday morning. Well, this is not that big of a deal. So we just need to go up to the top and create an adjusted open column. Let's do that very quickly. The adjusted open will be equal to the regular open minus any difference between the regular close and the adjusted close. Make sense? So that's how we'll do that. So before I forget, let's go ahead and copy those and paste as values. And one thing I'll point out, if you scroll down to the bottom, our close and adjusted close, although they started at the oldest date, very different. When you account for all the dividends, they end up being the same at the bottom. And our adjusted opening price is the same way. So we are ready to delete some columns. I don't need any of these columns except for the adjusted open. All of our trading profit or loss will be determined from this column and the date. There is one more thing we need to do on this worksheet, however. We need an all-inclusive date column that has Saturdays, Sundays, and all the holidays on it, because some Fridays the market's going to be closed, and as well as Mondays. So our first date is January 29th, 1993. Let's come over here and scroll down to 1993. Here's January 29th. I'll do a shift and down arrow, copy all of those cells, and let's paste those in right here. We'll call this date. And we'll run a VLOOKUP like we did before. We'll look up this value in this table, column 2. Fix my references. And we'll paste that all the way down. As we expected, we've got some NAs in there, but it goes all the way to the bottom. Let's go ahead and copy those, paste as values to fix them, and let's replace all the NAs with nothing. So let's move this over and we'll delete these 2 columns. Okay, so it's the same drill as before. I'm going to create a new adjusted open column to fill in all the blanks. I'm going to use a simple if statement. If this cell is, we'll say, greater than 0, show me that. If not, show me what's above. We'll fill those all the way down. Let's make sure we got them all. We do. Let's paste them as values. And delete this column. So there you have it. I'm going to make a new column here. We'll call this weekday. We don't really need it, but it'll help us visualize the dates of the days of the week. So we'll go back and custom format this with the old DDDD and paste that all the way down. And over here, I'm going to pull in our decision. That's going to be a VLOOKUP of this date over here in our VLOOKUP table. I'm going to fix my values or my data array. So there we've got our decisions in. Let's make sure they go all the way to the bottom. And they do. I'm going to clean up this and make it just 2 decimal places. So now it's going to come time to put in our starting principal. And we'll make that $10,000. Just because I know this is going to be easier, we're going to start it on a Monday. So I'm actually going to delete these 3 rows. It's just easier to start it on a Monday because all of our trading is on Mondays, and that's what we'll do. So we need a number of starting shares, at least for the buy and hold scheme. So that's going to equal our starting balance divided by the price at the beginning. So Monday, February 1st, 1993, the adjusted open was 2609. We could have bought this many shares. And I'll just say, since we want to be as precise as possible, that we were able to buy partial shares. So keep in mind for the buy and hold scenario, we're using the adjusted open. And these early ones have been adjusted much, much lower to account for dividends. So we're going to have the same share number for the buy and hold investor right from the start all the way to the end. We're accounting for the dividends in a different way. In reality, this opening price would have been much higher and we would have been able to buy fewer shares, but we would have accumulated up to 383.3 by the end of this under the buy and hold strategy. So let's put our crossover column here and our buy and hold here. So our starting balance for the crossover is going to be equal to $10,000. For the buy and hold, I'm going to express it a little differently, and I'm going to say the number of shares times the price that morning still equals $10,000. So for the first cycle of this, I'm going to do it a little bit differently, and then we'll create a formula that we can paste all the way down, and you'll understand why in a minute. So we do all our buying and selling on Mondays, so we're going to recognize all of our gains or losses on Mondays. So this gain or loss here is going to equal our starting balance plus our starting balance times a return for the week, which I will express as this number minus this number, close parens divided by that number. 10,272. So that should be the same as this since both strategies are buying and holding. We'll paste that down and it looks good. For the buy and hold formula, I can paste this formula right here all the way down, or every seventh cell, all the way down. But for my crossover formula, I'm going to have to do something different. Let's think about this logically. Here's a Friday, and that's we'll just call that a decision day. I'm going to put that in red. Now, if we were to change from buy hold to exit cash on this Friday, when does that decision actually manifest itself in a different return? Well, the answer is, we can't even do anything about this until Monday when we put our trade in. And then we have to wait till the next Monday before we can capture any gain or loss that would result from this decision. So it's actually the following week where you see the effects of your decisions. Now, on this Friday, and I'm going to put that one in blue. I like this nice blue here. That one would actually manifest itself here. So I'm going to write a formula for Mondays that'll carry all the way down. And it's going to go like this. Equals if this cell equals buy hold, the value, if that statement is true, is going to be this amount of money plus this amount of money times a return, which I'll express as this Monday's price minus last Monday's price divided by last Monday's price. And the value, if false, is simply going to be this. So we get 10,294. Since both strategies are buying and holding for this period, it should be the same. And it is. So what I'm going to do is paste this down every seventh cell like this. And this is going to take a minute, so I don't know a faster way to do this. I'll be back with you as soon as I'm done. I pasted in all those values down to the end, but before we look at the result, I just want to kind of sanity check our formula. So I scrolled down 400 rows to the first transition from buy hold to exit cash, which happened to occur on a Friday. So on this Friday, we would decide to liquidate our position and go to cash on Monday. So this return from this Monday of 28.26 to this Monday of 26.41 resulted in a decreasing balance. That's a pretty big drop too. And then we are going to hold at 10.125 because we're out of the market. Unfortunately, the market went up between those two dates, so the buy and hold guy made back a lot of what he lost and we didn't. So let's go scroll down to the first transition back just to make sure we can go full circle. I scrolled down to the first transition from exit cash back to buy and hold. So this occurred on a Monday, and the Friday decision remained the same. So we would have acted on this on Monday and gone back to participating in the S&P 500. Unfortunately, this week we're still sitting on the sidelines until that Monday. And then the following week, it went from 30.03 to 30.29, and that resulted in a small gain for us. So it looks like our formula is working fine. Now I've scrolled all the way down to the end to see the ending balances of this week, in fact. And it's not good news for the moving average crossover investor. He would have been trounced by the buy and holder. Now, past performance is not indicative of future returns, so keep that in mind. And I'm going to go ahead and put these on a graph to see what they look like side by side. So let's open up a new sheet, and we'll call that comparison. And I'm going to take my date column and move that over. We'll turn that all the same color. And I'm going to take my other two columns right here and move those over as values. I don't need this row anymore. Now I'll show you a neat little trick. If you select these two columns and you say find and select go to special blanks, it'll just select the blanks and you can go ahead and delete those rows. It takes Excel a second to crunch that. So now I've got nice, neat data to graph. So let's just select that and insert a chart. And I don't need a chart title, so let's get rid of that. Let's see what this looks like. The buy and hold investors in orange and the crossover investors in blue. And it looks like all but 1 point on here, the buy and hold investor is ahead. They were pretty close. This was a pretty damaging time here. It looks like the crossover person got out at the bottom and then got in at the top and then took another hit. Wow, back in 2016, a lot of damage was done. So I'll let you draw your own conclusions from that little exercise, but that's the back test of a simple moving average crossover system. If you've enjoyed the content of this video, please consider hitting my subscribe button. I will produce one new video per week for the foreseeable future, and it'll be similar topics like this and other projects that I find. Thanks for visiting Spreadsheet Geek.